Guys, this is Nasar, aka the Real Estate Guru. I'm not a guru, I'm a guru because I actually do this business. I'm back again with Natalie. We're going to talk about capital gains, all right? What is capital gains? I know capital gains are not exclusive to real estate. You can get capital gains in multiple asset classes, but I'm going to let her explain it so she can give us the correct definition and not me and I screw it up. So Natalie, can you tell us what capital gains is?
Yeah, capital gains are what you're going to pay if you sell something that was held for investment. So that can be stocks, that can be real estate, or the most common places you see it from. But it can be any other type of, like Bitcoin is also any kind of cryptocurrency is also capital gains.
So, all right, there's a misconception that I can make money with cryptocurrency and not pay taxes. So I got to pay taxes on cryptocurrency.
Yeah, and they cracked down on it last year. Like there was people who were trading cryptocurrency for the first several years without not reporting it. And like last year, I think they sent out like millions of dollars worth of notices to people who weren't reporting, where they kind of started tracking those trades. So if you've been doing Bitcoin or any kind of crypto, get it together because they're cracking down on it now.
So the government is literally going to get paid.
Yeah, they're after it.
Okay, yeah. All right. I didn't, because one of the benefits, I was watching a documentary on cryptocurrency, and they were saying one of the benefits is you can never know how much someone has and the secrecy, but I guess the government found out a way.
Yeah, it took a couple of years. They kind of caught up to it, and now they're tracking it.
All right, so a capital gains. I'm going to use a house example, right? Let's say I bought a house that was worth $150,000 for $50,000.
Okay.
All right, so I put $50,000 into the house. Mm-hmm. All right, cost basis. That's what all I have in the house. I used to work in the financial industry. Cost of the job, but they took us something. So $100,000, that's my cost basis. That's cost basis is what your investment, what you have in the property. I sell it for $150,000 for the sake of this example. There was no realtor commission, anything involved, right? So I walk away, I make $50,000. Okay. Now the attorney's office, they always ask my tax ID number. So and they say make me sign on a form that they got 1099 me for the amount of the house.
Yeah.
So the capital gains. Am I paying taxes on $150,000 or am I paying taxes like just profit?
Just on the difference, just on the profit. So in that case, it would just be on $50,000 of the spread, the difference between the two. That's what you're going to pay the gain on. What the title company is going to send you will be a form for the total amount you received.
Right.
So your accountant will have to net the difference for you. Don't panic when you get the 1099 saying $150. You don't pay on the full amount. You have to back out what you paid. And then also worth noting, if that house was a flip, if it was done like really quickly, resold for money, it might be ordinary income and not capital gains because it wasn't a long-term investment item. But if you bought it and like rented it for a year and then sold it kind of thing, then it would be capital gains.
Okay, so within a year, I buy and sell within a year, how much is my capital gains?
It's going to be at your ordinary income tax rate. Okay. So the same amount that you pay on all of your W-2 earnings, any other income, it's at that rate, but there's no self-employment taxes, so there's none of those extra payroll taxes, so it's just your regular ordinary income tax bracket.
Okay, because I was advised when I first got into the business, capital gains tax are 30-something%. Is that accurate or is not accurate?
It depends on your income tax bracket. So there's several capital gains brackets, and they correlate to your normal income tax bracket. So it's like if you're in this bracket, you pay this much for capital gains, this bracket this much. And then it is important to keep in mind that your gains go into your total income that determines that original bracket. So it's kind of a circular calculation. Okay. So I'll hear people say, I'm just going to take a year off, go live on my mom's couch, not make any money, sell a house for $200,000 tax free, right? Because I had no income, but that $200,000 is now income. So you've got to look at it with the gain as part of it.
Okay. So, all right. So with the capital gains, right? So just like there's an ordinary income table of what bracket you're in, there's also a capital gains table of what.
Yep, exactly. Okay. And so for short term, which is if you've held it a year or less, it's the same. It's the same amount as your ordinary income.
Oh, it's going to be the same amount.
Yep, same amount.
Okay, all right.
Once you get over a year, it's better. And it's normally like a 15% or sometimes even a 0% if you make less than $80,000 if you're married.
Yes. So, and I remember a few years ago, I was emailing you because I wanted to sell a property, and you gave me the example. If I sold it less than a year, or in the other examples, I sold it a year and a day.
Yep.
So, of course, man, the tax difference was like, it was a no-brainer. I might as well keep it for a year and a day, and just pay the smaller amount of tax on it. because I want to say it was I picked it up for 25,000. I had the lot for 25,000, and like a year and a day later, I sold it for like 100,000. It was in a gentrifying area that the property is appreciating crazy. So, but yeah, with the capital gains. So also, just like in real estate, they have capital gains. They have capital gains in the stock market as well.
Yep.
So the capital gains, if I do stock, right, do they go by the same rules, like 1 year less and then a year and a day over?
Yep, same for any capital asset sales.
Oh,
same rules.
Same rules.
Yep.
So what in those assets, I'm going to assume is going to be things, stocks, now cryptocurrency, real estate, gold, and...
Yep. Anything antiques could potentially be that, as long as it's not
Okay.
your normal business. If you're an antique dealer, it's ordinary income, that's what you do. But if you just like inherited Nana's antique clock and 20 years later sold it for $1 million, it's capital gains.
All right, so Nana had, I forgot the name of that popular clock, but Nana had one of those old school made out of wood clocks that go like this.
Yeah.
I forgot the name of it. I inherited it.
Yep.
So I sold it. I got $1 million for it. I got to pay capital gains on that whole million then, because I got it for free, right?
So if someone passes away and you inherit an asset, you get what's called a stepped up basis. So basically you get to, instead of going back to whatever, grandma paid for that clock, you get to now put it at the value. She probably paid like a straw penny for it, And so you now get to put it at the value of the current market value at the time they passed away. So that's really important with real estate too, and why you don't want to always give property to your kids instead of letting them just inherit it. Because if you pass away and they just get to inherit it, if you paid $50,000 for a house, forever ago, and now it's worth $1 million, they get to, now their basis, their investment in it steps up to that $1 million. So in theory, if you inherit something that will be subject to capital gains and you sell it at the same time, there shouldn't really be a gain, because now your value is the fair market value. It's what you'll sell it for.
Okay, so all right, so the clock, when grandma passed,
Yep.
let's say the clock was worth $500,000.
Okay.
And then after years of me going over the grief, and I find out, well, let me just sell, get rid of this old thing. And I'm getting offers at $700,000, $800,000, $1 million. I say, well, I'm gonna take this guy's $1 million. Well, I fill out some forms, and I would pay capital gains of $500.
Correct. Yep. The difference from the value
Okay.
at date of death to when you sell it.
Yeah, it's kind of crazy you came up with the example of, hey, look, I got the 50,000. Mama or grandma paid 50,000 for the house, now it's worth for $1 million. Like I know a guy. He's in the real estate space. That's literally his mother's situation. Like she, somewhere out there in San Francisco, she bought the house in the 70s, earlier 80s. She bought the house really cheap, and now it's literally $1 million plus. Like it's higher than $1 million.
Yeah.
But what he did was he put it in a trust.
Yep.
So that when he gets it, now since he put it in a trust, and if he gets it, is that like is that still considered inheritance or by the government, or he's the beneficiary? So it automatically goes to him. Does he still have to pay capital gains tax?
Depends on how it's structured. So
Oh,
in
okay.
situations like that, I always recommend talking to an estate attorney to make sure it's in the right kind of trust and that you're not going to lose that stepped up basis. So
Okay, all right. So you want the stepped up basis.
yeah, you want that.
You want the stepped up
That
basis.
lets you start reset to the current value.
Okay, all right.
Yeah.
Okay, so that's what you want. All right, so yeah, so there you have it. Capital gains. That's what capital gains are. Capital gains essentially is basically profit.
Yeah, profit on any kind of an investment.
Yeah, profit on any type of investment, regardless of your asset class. And as you see, like I didn't even know cryptocurrency was getting taxed now. And
Yeah.
the people who were doing it previously, they got big tax bills because it's like, all right, well, it's getting taxed now. So the last 5 or 6 years, I made $8 million. Just let me slide. And, but unfortunately, the government does not work like that. So now, if somebody been doing real estate or cryptocurrency for 5+ years and they have not filed no taxes, can you help those people, and how do they get in contact with you?
Yeah. So you can reach me on the website. I always tell people if you've got unfiled years of taxes, you want to get that caught up as soon as possible, especially with financing and things. You won't be able to get loans at some point. So the website, colotax.com, the best options to set up a consultation, and we can kind of look over everything and see what it'll take to get you current. The hardest part is going to be figuring out your records from 5 years ago. So try not to let that happen.
So there you have it. Just going to put all my social media on the screen. Guys, go to the blog, realestateguru.com. You put your name and email in. And yeah, until next time, I wish you guys much success in your life and in your business. Peace.